Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the weekly market analysis where we look at what happened in the markets last week and how we can plan for a better trade the next week, upcoming week, which is October 18th, Monday 2021 starting. So if you're not subscribed, please subscribe and share to your friends. And thank you so much. So without wasting time, we're getting into the charts in the study and the market last week. You can see that we'll be analyzing the price action and the patterns to begin with, right? We'll be having a slide, don't worry. So what do we have in the Nifty? Weekly candle it's a wide range green candle with 2.5% breakout of move that happened last week, right? And it's just 300 points on top of the 18,000K which it was struggling for a few days, right? Banknifty, what happened? Weekly wide range bullish green candle with 4% or more breakout up move with 1,500 points. 4% is near 1,500 points of up move, and it is 300 point above the rounding number of 39K. Look at this. Look at this up move that happened. Day 1, 2, 3, 4, 5. That's what previous 5 days were like, all green candles. You can see that, right? 1, 2, 3, 4, 5. Look at the candle size for Banknifty. That's exactly what happened last week. The daily candle, if you see, it's a bullish kicker pro gap pattern. Pro gap is a professional gap. It's a gap. 2 times it happens with a bullish kicker. See the gap? See the gap. This is a very bullish pattern. Extreme bullish pattern is what pro gap is all about. 2 times it happened last week, 2 days. So last candle also was that, and then Banknifty latest candle is 700 point wide. Look at that last candle is 700 point wide, right, from last Friday. So the 5 days candle, if you see, it's like having 2 pro gaps, right? All 5 days green on Nifty, right? And on the Banknifty, if you see, it's higher high pattern clearly, right? Going high, going down, making another higher high, higher low, higher high, higher low, higher high. Now there is scope for some more probably correction, right? If it goes like on Nifty, but probably after some time. Now Nifty is clearly showing walking on the Bollinger Band pattern, right? And Banknifty is already in the upper Bollinger Band territory and also started walking on it. The volatility is expanded further towards the upside. You can see that, right? This is the Bollinger Band, which helps you to analyze what is the market volatility. So the volatility, you can see that it is very low here. It burst out and then it expanded, and again it was showing small signals of consolidation last week, and it burst out here also. So it expanded and burst out. So this is the upper band, this is the middle band, and middle band is very far from the upper band. So volatility can be huge, right? The further it is away, more risk of the market to fluctuate and choppiness can increase, and you can see that it is walking on the upper band. It's walking on the upper band. That is again another sign of extreme bullishness. That's the price action that happened in the market, right? Big mega 1,500 point moves in Banknifty and 18,300 point move with multiple bullish kicker professional gaps with the volatility walking on the bands is what the summary of the price action if you look at the charts, right? Extreme bullishness, definitely. Look at the support and resistance level. The Nifty resistance is in uncharted area, right? This is mistake 18,300. It's above that. So the first, please ignore this writing. Look at this Excel screenshots, right? So this first support will be 18,200 to 18,250. This is what we're talking about. That's where the first support is going to be. First, right? Because there is a gap here. So that gap could act as a support. When there is a gap, the gap can in turn hold the downward, right? So that is the first. And second one is 17,950 to 18,000, which is again a gap support plus a 23.6 Fibonacci extension support, right? And then after that you have, if that also breaks, you get 17,850. That also breaks, you get 17,650 range. So that is where this is. That's all previous swing lows, previous resistances. Right? So these are the immediate four supports anywhere. On the upside, you have the first 38.2 Fibonacci extension, which is 18,350. Then above I will have 18,650. That's what we have written there. Right? These are all Bank Nifty coming to that. Where do you start? Right? This is Bank Nifty levels. Right? On the upside, the first resistance will be 39,300, 400. Right? And if that breaks, it's 40,000. Right? And if that breaks, it's 41,800. That's the kind of projection figures that we are getting. And if you look at the support levels, 38,800 to begin with the first previous resistance, then 38,350. Then if that breaks, its support is at 38,000 levels. That breaks, it is 37,800 kind of levels. So that support and resistance of Bank Nifty and Nifty is clear, but the resistance is it's uncharted territory. So we can only use the projections, right? Not the precise supports, right? So weekly momentum and trend analysis. There's no doubt about that, right? The momentum is extremely bullish in all time frames, daily, weekly, monthly, everywhere, on both the Analysis Nifty and the Bank. But Nifty on the weekly has a bullish reverse divergence on the that's over actually. Please ignore this second point. The momentum bullish reverse divergence on the weekly, right, is over now. That's already met with, right? So this is what we are talking about. That is complete. That is history now. That's the target is met and gone beyond that, right? Now the next point, so please ignore the second point. Third point is there is a 4-bar bearish divergence, right? This is bearish, right? You can see the price is moving up and the momentum is coming down. So this could bring back to this lower support rate of about 17,650, 600. That level it can bring it back if it works out. It's unconfirmed. Remember, only if the candle here, the price moves below that, right? Only then you can say it's started to work, right? But keep that caution in mind that Nifty has a 4-bar. 4 bars are powerful, and that one weekly. So it may take time, few days. Week is 5 days, so be cautious about that. Otherwise, Nifty and Bank Nifty, the ADX trend indicator, the trend is clearly bullish on all time frames and with strength increasing. Look at this. This blue is the DMI positive, red is the DMI negative, and the green indicates the strength of the thing. It's already above 45, near to 45 levels on the Nifty on the left side. It's clear bullishness with trend up, rising up. Trend rising up on Bank Nifty on the right side. If you see, it's about 30, clear bullish trend, and that too, this is just daily. It's same in daily, weekly, monthly. So it's clear uptrend, clear momentum bullishness that you can see in both of them. No doubt about that. Now go back to open interest analysis and then volatility. Let's see what happened with the VIX. Right? The VIX stayed flat. It is closing, very close to the 16 levels. Probably just trying to form a range between 15 and 19 or 20, that kind of levels. So it is attempted a little bit and then again fall down. So it had gone up to now 19 levels and then it's fallen down. Now open interest data of Nifty. If you analyze, you can see that the futures data is showing a short covering build-up on the Nifty as well as the Bank Nifty. Now, 21st expiry, weekly expiry, if you see, the highest resistance here is only 19,000, and below that there is 18,500. Remember that there is a short week, right? Truncated week, and so no trade has happened for the next expiry, which is of October 21st. But still, that's the data in front of us. So Bank Nifty open interest, if you see that, you can see that. Now before that, Nifty open interest, if you see the support levels are 18,100 and 18,000 level supports as per the open interest analysis data of the options. Bank Nifty options, you can see that 40,000 and 39,500 is where the resistance is. 38,500 and 39,000 is where these are. So 39,000 getting conquered. It's already, it's already a support level, so it's already beyond that. 300 points above that. So if 39,000 is kept in bag, means 40,000. If 40,000 is crossed, it's a breakout, means it can go anywhere. So look at the bullishness in the put bullish is 1.1 on the Nifty and 1.7 on the Bank Nifty. VIX, we already talked that the VIX is staying flat, right? but not at the very low level. It's near to the 16 levels. It can mean road and go further up to the 19 level also next week. It's possible. So implied volatility is 14.6, which is greater than the HIV, and the IVP is 27%, which is not that great, but yeah, it's much better than the 3% of IVP that we saw a couple of months back, right? So that is what the volatility is talking about, and that's what the optimal analysis data, which seems to be kind of matching. Short covering is going to be big powerful whenever the short cover people are short now turned, and it can be explosive move, sometimes more powerful than a long build-up, right? As per the futures optimal build-up, it's showing short covering on both. So this is the charts that we are talking about. As you see, look at that 18,100 levels and 18,000 kind of supports, and then the chart has more resistance on the upside. That's what it shows. But as I said, the chart is not yet been traded for the next expiry, and this is for the October 25th expiry. Now look at the sector. So IT sector slightly bearish. It corrected near to 2% of correction happened. And basically what happened is it dipped and corrected and then recovered last week. So it's a V-shaped move that we are seeing, but the momentum is still slipped, in the slip stage in the sideways, and it has to come back. Now FMCG is going good momentum up. This bounce back with 3% of up move, and then there is a bullish momentum reverse rises that we talked about last week, and it has turned out to be true, and then it's working, right? So that is what is pulling the price up in the FMCG sector, and daily momentum is also good short term. So definitely time to pick up stocks in this, right? Stocks like ITC or Dabur or Marico, and stocks, Bata, all of Titan, all of these are busting out because of the festive mood as well, right? So the metal moved 6% last week. That is also bouncing, and then it's also formed a wide range green candle with a clear indication of bullishness back, right? So pick up the stock in this because the momentum is also good. So FMCG and metal do good. Auto definitely 6.5% bounce back as well, and it is clearly showing a breakout from a double bottom pattern. If you look at the chart, you can see in the weekly double bottom, W pattern breakout, and the previous resistance is clearly seen, and the auto is super bullish. Pharma also moved up 1% last week, but it's the edge of momentum. Whether it will sustain the momentum or not is not very clear. So it's better to wait a little bit before you start picking up stocks, right? Because there is a resistance zone also, which is where right now the price is at the pharma sector. So stay cool, just wait for some more time in the pharma sector before it turns to be bullish probably, right? So resistance need to be considered. So reality again, super bullish 3.4% further up move. So 35% of more percent. It's having a cup and handle breakout. It's having a flag pattern breakout. It's super bullish, and the sector is long way to go up. And already this gone 35% from the neckline of the cup and handle. It formed a cup rounding pattern, a handle was formed, and then it broke out. Reality bullish, auto bullish, metal bullish, FMCG bullish, IT sector, pharma stay until the momentum is picked up. What is the institutional participation? This is very interesting data. So institutions bought 973 crores last week, and domestic institutions sold heavily. 3,500 crores of selling happened last week. And all this up move happened with this 3,500 and hardly 1,000 crores the entire week's buying that happened. So it was not institutions, but the retail was running the market last week. Is very clear. Retail participation is evident just by looking at the data of the institutional participation last week. But net longs and derivatives are long, so domestic institutions and the foreign institutions also. Now get a look at the global markets. Right, this is the bottom. What you see is the dollar index. You can see that it is at the resistance zone. It is facing resistance. The last candle in the weekly is bearish. Right, so it will take some time for it to take out the second resistance because it took a double bottom breakout, lasting several months to take out the previous resistance from the breakout. Now it takes some time to consolidation. It is resisting, you can say. Same is the case with the USDINR currency pair. If you see that it's an inverted hammer that you can see, and the wick size shows the pressure from the bears that you can see. It is broken out of the channel, and probably it is falling back into the channel, right? So 75 to 76 may not be that easy, but right now it is way beyond 75, 70.6 or 7. That's the edge of the resistance that happened, and most likely it may fall back. No, never know, but it all depends on the strength, because the momentum of the USDINR and also in the currency pair, also the moment I see it is forming some kind of range shift in the momentum. No, the switch from sideways move for so long and back after multiple months, it has gained and range shifted moment in the bullish zone. So this may or may not, it just is not clear. But as per the candlestick pattern, there is definitely tight resistance up there. 94.53 in the dollar index. If it is breaking, then definitely rupee is going to weaken further. The USDINR has an inverted hammer, as I mentioned. Crude oil, you can see that crude oil is heading out crazy with 82 kind of levels nearly. So multi-year high is what is happening, which is definitely not good, with the dollar also strengthening that much. Right? It's all good for Indian economy and Indian markets eventually. Gold, you can see that it is trying to hover around that support zone. Multiple times it was pulled out from the support zone, but it is again climbing back, and then it is formed the inverted hammer. Does not mean much. It just shows the resistance, the big size, and it is just not ready to give up is what it shows. Just remember that Vauld is having a weekly, monthly basis cup and handle formation that is happening. Once that handle is formed, there can be a big breakout up move that can happen in a medium to long term. Right, so that's exactly what you're seeing. So actionables, two actionables. HDFC Bank, definitely, two peer zones, that resisted for so long, that was taken out, and a W pattern breakout also is happening on a weekly basis, and wide range green candle with super momentum and trend all time frames. Definite pick for long. Right side batter, FMCG. Bata is also rounding pattern breakout. Look at the candle size, big up move, momentum trade super, and then that's another pick that can be traded for the swing trade for the next week. Now, if you do the index trades on the option derivatives, you can see that this double calendar spread can work out and give reasonable probability of profit and also reasonable risk reward with less capital and good range. It gives a range from 17,950 to 18,600. So, hopefully say 18,650 is not going to get close, but it is at a neutral position, and then it's the right time. If you can get at these prices listed there, is going to be good trade for the next week, right? Because there could be some resistance that can happen after the result rally. Yep, so that's coming to the wrap up. So bulls are roaring in the markets, no doubt about it. Reasons, fundamental reasons. If you look, it's COVID recovery. The industry business is getting back, the quarterly earnings, the festive seasons. That's the reason why it's at record high levels, and in a very short span of time. That is a key thing. Not the record level, the record levels that is breaking out in a very short span of vertical up move that is happening, and nobody would ever have imagined to close 18,300 in such swift moves. And all the banking, reality, auto, FMCG, all sectors are clearly breaking out. So the buyers in the short term definitely is bullishness, but with caution, because it's an all-time high. The markets are in no mood to go for even small corrections is the mode. It's bouncing up crazy, and there is weekly momentum divergence on Nifty, which is not confirmed. Right, that divergence is bearish. Remember that. So that is the reason why it is cautious. All-time high is the reason why it is cautious. Both booking can come is the reason why it is cautious, but otherwise trend, momentum, and the candlesticks and the fundamentals, if you see, market is crazy bullish. Right? You just have to join the party and then go with the trend, right? But yeah, of course you have to be careful because of the reasons I mentioned. VIX had early week shot up to 19 levels, but it is cooled off and then come down and consolidating around the 16 kind of levels. And it's not ready to fall down, neither go up. Just attempting to go up to 17, that kind of levels, and then again coming back. Now, as I used to say, every week take vertical spreads in the options, not naked long or short, because profit bookings and sudden dips and sudden dip buys and all this makes it very for a directional trade to happen. So that is why vertical spreads like bull calls, bull put, all this, depending on your view on the market, take spread positions with a buy and a sell of a call or a put, depending on your view on the market. It's mild, bearish. If you do not know how to take vertical spreads, there are some videos look at the playlist, and then you can see them and learn that, right? So double diagonal spread can benefit because there is a backup positive that can happen with the main reversion of the VIX from this lower level to the back to the 19 levels. If it goes, backup positive strategies can work. So double diagonal is a good bet. Positional trades, new entries may not be the good time. Have to wait for the retracement, but you're already in there. You just have to be cautious on where to exit. What are the support levels? What are the swing lows? So we all discuss all of those points. That has to be kept in mind, right? And how we have to trade also has to be clear on depending on where you entered, and what is your target, right? So that's a wrap up of what the market is. I hope this gives you certain idea of creating your own view, right? And this is purely my view and my recommendation. And if that helps you to frame your view to have a good plan for the next week, and if you like it, please hit the like button and share and subscribe if you're not. Thank you so much for watching. Happy trading and happy learning.